The problem CloudMargin is really trying to solve is essentially thinking about post-trade derivatives and post-trade derivative processing. There's been a lot of automation that's happened. There's been a lot of advancement in the creation of efficiency kind of throughout the life cycle of derivative products. I think, personally, where that kind of tailed off and stopped was when you kind of got to the back end of the process. So collateral management has almost kind of been, the forgotten piece of post-trade derivative transformation. And so CloudMargin is really about trying to, create that efficiency, create that kind of straight-through process, take risk out of the process, take operational risk out of the process, reduce counterparty risk, and kind of create the efficiency that other parts of the post-trade derivative ecosystem have benefited from. To do that in a way that is, in a modern technology stack, in a software as a service, where you can kind of democratize the cost of really a commoditized piece of post-trade processing, right? No one differentiates their ability to sell derivative products through their ability to have, sophisticated in-house built workflow. Really, it's about, democratizing that cost and bringing that efficiency, once and for all, to the end point of the collateral management process. Firstly, we were clearly delighted to close a $15 million financing round, in the middle of a global pandemic, where we're experiencing, huge market volatility. So getting partners like DeutscheBank, like the Deutsche Boerse, like Citi, to invest in us, really was kind of a signal of the strength of our business, of what we're doing, and of our strategy. Really how we going to invest that money. It's about, solving the true kind of tail of manual processing that still happens in and around our space. And creating that kind of networked platform where everyone is going to start to really benefit from the fact that the industry starts to coalesce around a single central point. It's really about kind of, executing, the product builds we need to do that facilitates that kind of final step of that tier one platform. And then there's obviously some regional expansion as well. Look, I think we have been pleasantly surprised by, the penetration the platform has had. Over the kind of last year, our client numbers have doubled. And, we still have these regulatory, tailwinds for us, I guess headwinds for other parts of the industry, with the UMR rules, so the uncleared margin rules. That really means that the industry is still kind of trying to find a place to centralize process, and that $15 million is really going to be spent on making sure that we're in the best position to be able to help the industry really adopt and adapt to change. An acquisition, an exit of this asset is just something that's not on our minds at the moment at all, right? We are, we're focused on the path ahead we have, right? We still have, we've had significant growth. We still have a lot of significant growth ahead of us. We really want to invest to make sure that we can really help the industry transform itself into a modern, technology stack, cloud native, software as a service, as I said, kind of democratize that cost. That's really our focus. Look, the future will take care of itself. I think you're right. There's definitely been, acquisitions in the post-trade derivatives arena by exchange groups. We have now a very interesting, a very diverse mix on our board, right? So we have these 3 new investors, but our existing investors, we have, Illuminate Financial, who really are kind of, really forward thinking and really aggressive in helping kind of young fintechs find their way and find their place. They are a financial investor by the very means that they're a venture capital fund. We have IHS Markit, who clearly are a huge player in not just market infrastructure, but data and so many other things. And they're a fantastic sponsor and company for us and partner. And we have Jefferies as well as some significant angels still. So I guess we have a really nice mix now which is really important to me personally. We have a nice mix now of financially motivated investors, but we also have a really good mix now with people that really care about, the transformation of the collateral management ecosystem. They care about what we're doing and how we're executing it, and so I think that's a really good mix for us. The long term, what happens to CloudMargin in the end, look, that's not on our immediate horizon for sure. We have far too much to focus on, but the future will take care of itself when the time's right, I guess. First of all, the global pandemic has been, horrendous on so many levels. The personal cost and, the deaths and the illnesses and, the economic destruction it's causing in the real economy is, it's just tragic. It's horrendous. CloudMargin, if anything, the pandemic actually is acting as a bit of an accelerant for our business. What it's highlighted, I guess, in now remote working and people having to deal with lots of on-premises technology and kind of the maintenance and the use of that in a remote environment has really kind of highlighted the benefits of a cloud-based software as a service product. So from that perspective, it's acting as an accelerant to people's mindsets around their requirement to transform their technology stack, right? So I think for our long-term ambitions, it's definitely helping us. In terms of, company, I guess, look, you can see I'm actually sitting in our office at the moment. If you look behind me, you'll kind of see that it's deserted, right? So, we are very much, a company that is completely working from home. So the company's adopted that. You're right. I think that brings with it some challenges around, how you kind of keep that collective culture and kind of, that really kind of pumped up site atmosphere that you have in a young company. Fortunately, our team have been fantastic. I never tire of telling people this, including my board, that actually, the kind of the output, the velocity of our development, the velocity of what we're doing has increased, if anything, by having people remote working. I guess they don't have to worry about commuting and, losing all those hours in the day to that kind of stuff. And interestingly enough, we're just going through a big rebranding exercise for CloudMargin, and some of that is really about bringing to the surface all the things that matter to us as a company and matter to our people, matter to our clients, and there's only kind of positive messages that we're constantly using and reinforcing across the organization. We are constantly together across Zoom, but we're always together. So there's lots of communication happening. Again, if anything, I think because we are forced to do it, there's more communication happening than probably would happen if we're all sitting together. People sitting there with their headphones on and developing away, and but now we're all communicating, right? And so I think we make the best of an imperfect world. We were not particularly heavy users of the old style of marketing pre kind of COVID pandemic. For us, it's very much about a digital strategy, a digital brand. We'll continue to pursue that. We are lucky that we also have some phenomenal partner firms we work with, right? So, IHS Markit, Acadia Soft, and so, we do a lot of kind of joint marketing efforts there as well, right? And when we talk about, the value we bring to kind of the value chain of their organization and how CloudMargin really fits into that and empowers parts of their organization. So we're very much focused on a digital strategy. Look, post-pandemic, I guess, conference organizers probably shouldn't be falling over themselves to come ask us to sponsor stuff, because I'm not convinced that we'll be doing a load of that.